A housing market crash is nowhere to be seen at the national level, but national level statistics in real estate don't always give you the best picture about what is happening at the local level, where you can have drastically different outcomes. In today's video, we're going to shift to the local level to look at which major metropolitan areas are experiencing the worst price declines and which areas are doing the best. Let's get into it. The last few months, I've been surprised to see the U.S. median home price set new record highs each month, given how unaffordable purchasing a home is for the average buyer. So for a change, let's dig into the local level data to see how different regional markets are performing. In my analysis, I'm looking only at metropolitan areas that had 350 home sales or more in April. Smaller metropolitan areas can have a lot more volatility in the median price, so we're just looking at the bigger markets. Redfin releases data on 920 metropolitan areas as of April, and the average number of home sales was 368. So making the cutoff for my analysis at 350 sounded about right and left us with 166 metropolitan markets. I then calculated the year-over-year price increase from April 2023 to April 2024 for each metro area. Here are the markets I found doing the worst. Jackson, Mississippi took the #1 spot for worst price performance. From April 2023 to April 2024, the median home price decreased by 7.8%. That's right, the worst price performance I could find for the year-over-year period for a large metropolitan area was 7.8% in Redfin's data. While that is a big drop, it is nowhere near anything I would call a housing market crash. The #2 spot for worst price performance goes to Lubbock, Texas, which saw the median price drop 4.4%, and the #3 spot for worst price performance was Crestview, Florida, which saw the median price drop 3.8%. What this data shows is that even though homes are at record levels of unaffordability because of record high prices and mortgage rates, we're still not seeing any market crashes in large regional markets. Again, smaller markets could be seeing very different price performance. Median prices in those markets can have much larger swings. But for large areas, there are no housing crashes happening as of April. Now, let's take a look at the other side of it. Which markets are doing the best? Buffalo, New York took the #1 spot for price performance with a staggering year-over-year increase of 24.4%. It can be hard to believe that some large markets are still seeing price growth this strong. But one important thing to keep in mind for a market like Buffalo is that the median price is so far below the national median price, $250,000, compared to the U.S. median price of $426,000. This helps it stand out as much more affordable market. The same can't be said about the #2 market, however. Anaheim, California came in second place with a year-over-year price gain of 22.8%. The median price in Anaheim was $1,185,000 in April, which was nearly 3 times the national average. So there's no affordability story here. The hot market in Anaheim has been attributed to recent new housing developments in the area. Now, you might be thinking, shouldn't price go down if there's more supply? Ordinarily, that would be the case, but not if demand is red hot. You can see from the sales to list price ratio how intense the demand has been in Anaheim. It has been consistently above 100 the last year, meaning that homes are selling above list price on average. Compare that to the national average for this metric, which has been consistently below 100 the last year, and you can see the difference. Anaheim is a much sought after market for many buyers, and it's showing in the strong price appreciation. The #3 spot for best price performance over the last year goes to Rochester, New York, which saw a 15.1% increase on a year-over-year basis. So these are the top best and worst performing markets among large metropolitan areas. What fascinates me the most about my analysis for this video is that there weren't any markets I looked at that had crashed over the last year. And by crash, I mean a decline of 30% or more in the median price like we saw after the last housing bubble. Markets across the U.S. are surprisingly resilient in the face of record high prices and mortgage rates. Until something changes in the underlying supply and demand trends, I think we're going to see more of the same in 2024. If you want to stay on top of the big developments in real estate that could cause a change, like where mortgage rates are headed in 2024, or if an economic recession is on the way that could strike a big blow to housing demand, make sure you're subscribed to this channel and hit that notification bell down below so you won't miss my next videos when they come out. And don't forget to hit that like button on your way out to support the channel and help it grow. Thanks for stopping by. I'll see you in the next video.